There's this weird idea that if everything gets cheap enough, everyone wins. But it's just not true. For decades, China looked like it just couldn't be stopped. It was the factory of the world, and they were so ruthlessly efficient it was almost art. Cities that never stopped, assembly lines running 24/7, and the prices, they just kept dropping, year after year, until Western companies basically just gave up. It seemed like a miracle. But every miracle has a catch, and it turns out China's greatest strength, making everything cheaper, faster, and bigger, is the very thing that's dragging it down now. It's like modern capitalism on fast forward until it breaks. The system rewards growth no matter the cost, even if that cost is, well, the future. So what happens when the world's biggest economy basically optimizes itself into total exhaustion? To get it, you have to go back to 1978. This guy, Deng Xiaoping, gets up and tells the Communist Party something wild. Getting rich isn't shameful, it's patriotic. That one speech lit a fire. Suddenly, farmers were becoming entrepreneurs. The countryside turned into a sea of factories, and investors from all over the world, Japan, the US, Europe, saw a gold mine, cheap labor, and a government that wanted to make deals. China set up these special economic zones. Think of them like test cities with totally different rules. No red tape, no bureaucracy, just one goal: get money in, get exports out. And boy, did it work. Shenzhen, which was this sleepy little fishing town of 30,000, just exploded into a megacity. Soon, every single province wanted its own boom. Every city wanted to be the next Shenzhen. Local governments started borrowing and building like crazy. Highways, power plants, factories, anything to get more business. By the 2000s, China wasn't just growing. It was devouring the world's need for, well, everything. Steel, coal, copper. If you were a Western company, you had to move your production there to survive. Everything became made in China. But there was a dark side to all this. The only way to win was to be cheaper than everyone else. Local governments fought each other for factories by cutting land prices, cutting taxes, and keeping wages low. Companies fought each other by slashing their profits. Everyone was just chasing growth. Nobody was thinking about whether it could last. It was a total race to the bottom, but it looked like progress. For a while, it didn't matter. The machine was just too powerful. Millions of workers poured in from the countryside, willing to work 12-hour days for practically nothing. And we, in the West, got our miracle. The $5 t-shirt, the $300 iPhone. It felt like we could have everything without inflation. And China got rich. But somewhere along the way, the system just started to overheat. It became an addiction. Local governments needed that growth to pay back the loans they took out to build all the factories, so they just built even more. By 2015, China was making more steel than the entire rest of the world combined. They were pumping out goods faster than the world could possibly buy them. So, prices started to fall. Not because of cool new inventions, but out of sheer desperation. When profits vanished, factories didn't slow down, they sped up, hoping they could make up for the loss by selling more. It didn't work. That's when this new word started floating around: involution. It's not just about people working harder for less pay, though that's part of it. It's about entire industries producing more for less profit. Competition stops being about who has the best new idea and becomes about who can survive the longest. Solar panels, electric cars, batteries, all the new stuff became the new battleground. Dozens of companies, most backed by the government, flooded the market with identical products. Each one just kept cutting prices to beat the next guy. Profits disappeared. But nobody dared to stop. In that system, if you stop producing, you lose. So the cycle just feeds itself. Cut prices. Watch your competitor cut them too. Profits collapse. Wages don't go up. We, as consumers, get cheap stuff for a little while. until we realize that this cheap stuff is costing us our own prosperity. China is now stuck in this self-destruct mode. It's not a race to innovate. It's a race to the bottom. And in a race to the bottom, nobody wins. This is why their solar panels are literally sold for less than they cost to make. It's why you see pictures of giant fields full of brand new electric cars that nobody is buying. And it's why, even with record exports, their industrial profits fell by over 20% in 2024. When everyone is just competing on price, the only thing left to do is cut it again. That's not capitalism working. It's capitalism eating itself. And here's the kicker. China has seen this before. Back in the 2000s, they did the same thing with coal and steel. Prices crashed and Beijing had to step in and force mines and plants to close, firing hundreds of thousands of people. It was like economic surgery. It's happening again. Only this time it's not just one or two industries, it's the entire model. But in China, politics trumps spreadsheets. You don't get rewarded for contracting. You get rewarded for motion, even if you're just running in circles. The leaders know the numbers are bad. But publicly, the message is always the same. Keep building. Keep growing. Because if the machine stops, the whole illusion falls apart. By the 2020s, China's efficiency machine isn't really about creating wealth anymore. It's just recycling it, thinner and thinner every year. Take solar panels. In 2023, China made more than twice what the entire world needed. Prices dropped 40% in 1 year. Companies went bankrupt, but the big guys kept going because their local governments needed the jobs and the growth numbers. Look at EVs. There are over 100 Chinese EV brands all fighting for the same customers. They're all just cutting prices to survive. You see where this is going? Factories are moving more stuff than ever, but they're earning less on every single item. But here's the big twist. Not all of this is a mistake. Some of it is the plan. China has gotten really good at what you could call weaponized efficiency. They use government money to keep key industries alive just long enough to absolutely crush all their competition. It's not about making a profit next quarter, it's about strategic monopoly. The logic is brutal. Flood the market with stuff so cheap that everyone else goes broke. Wait. Western companies who have to answer to shareholders just can't keep up. They fold. And once the entire global supply chain depends on you, well, then you can do what monopolies have always done, raise prices and call the shots. This isn't new. They did it with steel and rare earth metals. But this time it's for the building blocks of the future. Lithium batteries, solar cells, EV parts. In theory, it's kind of genius. In practice, it's incredibly fragile. There's a limit to how long even an empire can lose money before the whole system starts to rot from the inside. Worse, when every company just expects the government to cover its losses, they stop trying to be smart and just start competing for subsidies. It's a fiscal time bomb. That's the tragic part. The very strategy that helped China win is now threatening to eat its own economy. Because winning by losing money isn't victory, it's just delaying the collapse. What kills an empire isn't usually a drop in demand. It's a collapse of purpose. And in China, purpose has been replaced with just momentum. The system can't slow down. Local governments need factories running to pay their debts. Banks need those factories borrowing. And the central government needs everyone working to keep the peace. If any one part stops, the whole thing unravels. So everyone just keeps pretending that making more stuff equals more prosperity, even when it clearly doesn't. This is the trap of state capitalism. Production is proof of control. When growth slows, the state doesn't rethink. It just builds another factory. When prices fall, it pushes them lower. It's not irrational, it's survival. China's social contract was simple. Keep growing, and the people will keep believing. That worked when growth meant higher pay. It doesn't work when growth just means cheaper junk. The paradox is brutal. China's overproduction keeps inflation low for the rest of the world, but it also keeps its own people's wages down. For us in the West, all those cheap Chinese goods felt like a gift. But now, That same flood of stuff is exporting weakness. Our factories can't compete. Other developing countries can't even get started. And China didn't even invent this trap. History is full of it. Britain did it with coal. Japan hit the same wall in the 1980s. Even ancient Rome's downfall started with overproduction. Huge slave-run farms made so much cheap grain that it bankrupted all the small farmers who were the backbone of the army. Every empire that masters efficiency eventually faces the same test. Can you stop optimizing long enough to actually survive? China's leaders know this. They talk all the time about rebalancing to get their own people to buy more stuff. But that takes time. And time is the one thing a system addicted to growth doesn't have. So while Beijing talks about innovation, the provinces are just building more factories. The biggest irony? A lot of this stuff, solar panels, batteries, EVs, is exactly what the world needs to go green. But when the prices collapse so hard that all the companies fail, even a green revolution can stall. China's problem isn't that it's not productive, it's that it's too productive. It's an empire that mastered making things but lost its balance. It can flood the world with goods, but it can't create enough real wealth at home to make it profitable. The same relentless competition that made China rich now guarantees that nobody can rest long enough to stay rich. That's what happens when growth is your only identity. That's not development. It's just spinning your wheels on an industrial scale. And China is learning, just like every empire before it, that there's nothing more expensive than being too cheap. Because when you optimize everything except balance, eventually the only thing left to destroy is itself.